Hello, and welcome to this special edition of On Point by Oak Street Funding. Today we will be discussing the current federal funds rate environment and the importance of making an acquisition deal. The Fed announced its first rate cut of 2025 a few weeks ago, and more cuts are expected to follow in the upcoming months. It's critical to start the work now before more buyers enter as rates continue to decrease. I'm Matt Staninger, Market Research Analyst at Oak Street Funding, and joining me today is Alex Weaver, Vice President of Strategic Markets at Oak Street Funding. Alex, thanks for joining me today.
Yeah, thanks for having me.
Getting started, why is it such an important time now for RIAs, CPAs, and insurance agency owners to start considering those acquisitions as rates are just beginning to fall?
Yeah, it's really important for businesses to begin considering these acquisitions now because as rates drop, competition will increase as financing becomes more affordable.
And how do purchase prices and monthly payments shift when those interest rates drop? Really, what impact does this have on the affordability?
Yeah, so typically when rates drop, purchase prices will go up because there's a greater level of competition. So although you may be getting a lower interest rate on your loan, it typically evens out because you have a higher purchase price. That's why it makes sense to buy while the purchase prices are still low and then get the benefit of the lower rate environment on the purchase price you got down the road.
So it sounds a lot like how the housing situation was a couple of years ago. Whenever rates went down, suddenly prices went up and you saw all kinds of multiple offers on each house. Well, then in that case, what risks do buyers face if they wait until rates fall further and more competition enters the market?
Yeah, so, akin to what you just said, in many cases, the risk is they just get priced out of the market. As money becomes cheaper to borrow, many other businesses have a higher risk tolerance than you do, especially those that are much larger. So they might be willing to pay a higher multiple than you're willing to pay.
Based on the current projections, what do you expect to see for interest rates for the rest of the year and then going into Q1 next year?
Yeah, so based on the projections from the Fed meeting we just had in mid-September, we're anticipating 1 to 2 more rate cuts for the remainder of 2025 and potentially 2 more cuts in 2026. So we should see a fairly significant amount of movement by this time next year.
Right, so we're looking potentially an entire % down from where we currently are for next year.
Correct.
What steps should businesses be taking today to prepare for an acquisition in this changing rate environment?
Yeah, so typically the best advice we have in the short term would be threefold. First, you want to make sure to identify your own goals and analyze your current balance sheet just to see if there's anything you can clean up and make sure that your systems are prepared for an integration should you make an acquisition. Next, you want to make sure that you have a lender relationship established with someone like us to make sure you can move quickly on these opportunities so you don't miss out. And finally, you want to look through your network and see who you could possibly reconnect with as someone that might be looking to sell or merge in the coming years.
Great. So we talked a lot about acquisitions and why that's so important to prepare for at this moment. But besides acquisitions, what else can businesses be doing to prepare for a lower environment than we're in today?
Yeah, so another couple things many businesses should consider if acquisitions aren't their main priority, or even if they just want other options, are organic growth initiatives and debt consolidation. So lower rates also mean more access to working capital for things like marketing initiatives, hiring needs, and cleaning up expensive debt that you might have accrued on your balance sheet over the past couple of years when rates have been higher.
Great. So there are a lot of options out there for people who want to grow, whether it's inorganically or organically.
Exactly.
Alex, I appreciate you being here, sharing your time and your insights today.
Yeah, thanks for having me. Visit us at oakstreetfunding.com or call us directly at 866-625-3863 to start a conversation. Let us help you navigate the evolving lending environment and secure the capital you need to thrive. Thanks for joining us on Point.